and welcome to another episode. Today we will be talking about the use of volume profile and how it is used combined with market structure. Before we look at volume, we first need to understand how it works. Many people look at volume as indicators. Most of the indicators delay information, such as RSI, are lagging indicators. They always offer a late entry after the trend has reversed. With volume, however, it is a live indicator. First, we have two types of volume. We have horizontal volume and vertical volume. Each has its own purpose and is used differently. On the bottom, we have horizontal volume based on time. On the other hand, we have vertical volume that tells us volume based on selected price. The difference between volume profile and fixed volume profile is that with fixed range we can select where we want to see volume, rather than seeing the volume for the whole picture. Volume profile is an advanced charting study. It shows the traded volume amount of an asset over a specified period, at certain price levels. Volume profile makes use of previous traded volume, and all the strategies and plans are brought from historical data. This volume profile based on the big picture we are seeing. The data is based on everything we see in the chart. Just like candlestick chart, we refer to them as volume nodes. Using the volume profile, we can see in real time where was the most money traded. The more volume there is, the more likely price is expected to see some sort of a correction. Just like order blocks, volume profile can show us where we are most likely going to expect some sort of a reverse reaction. One of the most important elements of the volume profile is the point of control. This is where we can automatically have the indicator highlight the highest traded node. This becomes the point of control, which is known to be an area of reversal or correction. So now from a volume profile point of view we can see where the heaviest volume is, and with this information we can better position our entry when choosing the right order block or the right supply and demand zone. Before we learn how to apply volume profile, we first need to understand a simple concept of overbought and oversold. The market moves are meant to confuse people. Fear of missing out or greed all come into factor when price is already at its peak. Why would you ever buy something that is already priced high? Same with oversold. We need to use each tool we can in our ability to tell us where is oversold and overbought. Market structure is a great tool we can use to identify those same zones. Volume profile is another great tool that can refine our zones. In the case of buying, we are looking for price to be slightly under the point of control. This will indicate an oversold signal as price is below the most traded node. In this example here, we have two buy area. However, point of control is below one of our buy order block or buy area. This means the first buy area we had marked is not a strong one, and for better entry, we must wait for price to be under the marked point of control line. This will lead us into our next potential buy area, where we will be looking for confirmation based on order flow. By following this rule, we will be eliminating most of the noise. Most importantly, ignoring any potential buy areas that may come in the way. Now let's look at how we analyze fixed range volume profile. Fixed range can be used differently in many different ways. Before we look at this concept, we first need to understand the impulse and correction. This is basically the natural behavior of the market. This happens from macro to micro. For example, if we are in the 4-hour time frame correction phase, there are many smaller time frame impulse legs within the correction. Okay, back to volume profile. Let's look at the first way of using fixed range. First, go to input and copy our settings. Now, select major swing high and lows. In other words, select the area of the correction and impulse. It is important that the impulse leg clears a structure. From here we should have a volume profile based on our selection. There are few characters in the profile that can give us key information. The lower the volume, the more likely price is going to slide through the area. the opposite of a cluster volume. When we don't have much volume, it is an area to expect imbalance. The point of control area also acts as a magnet. Because of this, we can utilize the point of control to refine our entry or help us manage our already open position. Nobody can predict the market, however, with the use of such tools, we can get an idea of where price is most likely heading. Now let's look at another way of using the fixed range. Instead of manually selecting the area, we will the indicator session volume automatically do it for us. For this, we will be analyzing the volume profile over a daily period. To do this, simply go to Indicators and select Session Volume. This will display a new volume profile based on each day. This is a 15-minute time frame display setup only, as it provides volume during daily sessions. We are going to look at few ways of utilizing the session volume. We have three types of patterns: the flag, upside down flag, and a double flag shape. For this strategy, we will need to use previous day session volume to trade current day. Each session, we need to find what pattern is currently forming. Here we have the flag shape. We simply highlight the highest value area. With this in mind, we now watch how current day react to previous high value area. If price manages to break impulsively above this high volume zone, we will be expecting a move to the upside. Could be temporary or long term. With upside down flag, we look for the highest value area and expect a more extended move lower if price clears the lows. Of course, we will not be using the volume profile alone. We will need to use it along with supply and demand. In some cases, a demand zone could be waiting just under the volume and when price clears a low, which in turn will cause a bullish effect rather than bearish. This is why we need to use market structure in line with volume profile. Keeping it simple. Market structure acts as like a ruler in math or a guideline. By identifying where we should be expecting a bullish or bearish reaction, we can better position our entry. Just like overbought and oversold, when price reach under or near the point of control, this is what we consider oversold. We then need to wait for price to reach our buy zone that we found based on market structure. Once price is oversold for market structure and volume profile, we then look for confirmation inside our buy zone. If confirmation is found, we enter. If not, we simply wait. Here we have an example where we ignore a buy zone based on volume profile. We have small time frame buy zone from 5 minutes. However, the same zone is above the point of control. This means that this zone is most likely very weak, which is why we pick the lower zone. Without market structure, we can't use volume profile. We don't have to use volume profile to help us enter the market. We can use it to help manage our already open position. And there you have it. I hope I did a great job explaining the basics. For more information, visit our website at flydownx.com. If you enjoyed this video and want to hear from me again, be sure to hit that like button.